Hello, folks.
Okay,
It's another day. We got to learn. Let me do some little bit analysis here on just two pairs. Maybe you can learn something from it. First, I'm gonna look at the cable. Yeah. Yesterday I posted a live trade on the cable. Yeah. Let's see. It gave out just a few pips, but it was okay. Around 82 pips. That was okay. Yeah, I wanted to swing it up to this low here. Yeah. But I will show you the result later. But for now, let's look what we have here. Yeah, yesterday, after the break of structure here, the price returned to this H1 internal liquidity zone, and it was able to shift very well. Yeah, this was a good impulsive move drop. On its way down, we were able to see a structure here. The body was able to close below here. That means there's a clean structure breakout. Therefore, we expect the price to seek internal liquidity. And after this breakout here, as usual, we mark our trading range, which is from that high to this low. So this is our trading range. This is the 50% of our trading range, and this is our premium zone. So we look to sell from premium. So here, and in premium, we can be able to see we had a fair value gap here. This is a little one, okay, and we have this. This is our breaker, because from this order block, I don't know, I don't want to teach you that. That's a very, very important information to share it widely here. I won't tell you why. Anyway, most important, just see this is our breaker. So we expect the price to come back here before we drop. Our liquidity draw zone is this low still. This is our liquidity draw zone here. So we're looking to sell from up here, targeting this. So how many pips are this? Around 120 pips. If the price will be able to hit that, that will be 120 pips. There's a possibility that the price may not hit that zone today, because you can be able to see the market is silent. And I know these guys, maybe they're holding for the sake of NFP tomorrow. Yeah, don't forget that tomorrow we have NFP. So most of the pairs are stagnant. They are holding for the sake of tomorrow. Yeah. If you check the fiber here, what's happening? It's in a consolidation. Yeah. So from this consolidation, we'll be able to see a significant move, maybe tomorrow, either upside or downward. It's either way. So it depends on how the day will close. That's when we'll do the analysis of what may happen during NFP. That's when we'll anticipate. So today, the fiber may not move to anywhere. It is still in this range until tomorrow. Then we'll be able to see a significant breakout with a significant movement. And the cable, we'll be looking to see this low. The next pair is on the yen. I feel like to do some analysis on this on the yen here. It's long since I last traded this pair. This is a very volatile pair. It gives good pips. It's the quality of its pip. It's a very nice one. Yeah, its pips are very strong compared to even the cable. It's a nice pair to give you a good payout. So after this breakout, we expected a return to this liquidity zone. Let me use this one. We expected a return to that liquidity zone. So this is our what? What am I doing to here? We can say that this is a successful structure breakout. And then this is our H4 RTO. Let's call it RTO. That was successful. And let's see after that successful RTO, do we have another significant break over structure? Yeah, actually yes, because the body closed below, therefore that's a break of structure. Yeah. So what we'll be looking at is this candle here is our point of interest. That candle, and in lower time frame, let's see what we have. In all this candle, all this zone here is for our point of interest. Yeah. Let's see. In H1, now let's look for a point of interest in H1. Yeah, refining this to H1, and we would see a high, a lower low, a lower high, a lower low, then a lower high should be here, and these are minor breakout structure. First of all, this is a minor breakout structure. Yeah, and this candle here, the red one, is our point of interest. Its low is our point of interest. See where the entry was here. Use this one. Aggressively, this could have been the entry. This is aggressively for aggressive traders who don't need confirmation first. So if we check in M30, and be able to see that we have that structure, breakout structure with the minor, and this was the return to this here. This green candle is our point of interest in M30. Again, you can see that zone is a rental zone. Therefore, we're done. What else? We are supposed to sell from here. This was the sniper entry here aggressively. Yeah. And if we use our fib, so our recent swing will be this and that. So OTE2 was our entry. Okay. And what else? Aha. The next thing I'm supposed to do here. Oh, yeah, I don't know. I don't know how to tell you that because that information is too, it's very, very important to be shared. It's very important to be shared. Okay, but I'm glad that you have seen how we did this analysis. So the entry was here. For aggressive traders, this was the entry. For those traders who wait for confirmation, yeah, there is still no clear pattern, but I'm sure there will be a pattern during New York killer zone, which is actually, let's mark the New York killer zone. Hold on. Okay. You will mark the killer zone, if you don't know, just search how to check the killer zones. But what's most important, we'll be selling from this zone, and this was just by the way, it was not supposed to be this lesson. So from here, we'll be expecting the price to drop. Intradaily, the first target is yesterday's low, which is here. If you place your take profit, is below here. I'm not saying that this is the only place the entry was supposed to be. Of course, it's supposed to be here. But there is some other instance, the price may come back here, maybe to seek this. So it's you to know how to manage your risk and how to do your timing. The most important that I usually teach is that time and price. What time is it and where is the price? That is what's important. With that concept, you will be able to know if it is the right time to take your trade from here or not. So I'm anticipating short position from this zone. And if it is violated up to this high, then my setup is invalid. So let's say I was trading and I decided to take this trade aggressively. So maybe I sold here. I placed my stop loss here. This is too far though. I just go to M5 so that I can be able to see to use a very small stop loss. I use 5 minutes time frame. And the OP is this. So okay, let's just, because I'm just explaining, so it's an example. So maybe I've placed my stop loss above here and the price fails to obey these zones. And what happens? The price comes, takes me out. Yeah, that is a question you may ask me. What will happen if I'm taken out? So first, you have to make decisions, and these decisions, you must make them in such a way that they favor your account. Remember, there is what we call revenge trading. Yeah, you may be taken out and immediately sell because the price is still in. It is still in the point of interest. So if you sell instantly again because you're being taken out, then you sell here. What if again you're being taken out? So what you did here is a mistake. That is revenge trading. So for me, actually, let's say that I'm being taken out here. What I usually do, I have to look for another pattern for a re-entry. If this pattern that made me sell here is being violated, I'm sure the market always gives another chance to get into the market. That's why you should never chase the market. Yeah. So if you're being taken out, you don't have to sell instantly. Just wait and see a different pattern. Yeah. That means this zone was not supposed to be the entry when you're being taken out. That's why you use your stop loss. For the market to use that stop loss to inform you, to communicate to you that where you took the trade, it's not where it was supposed to be. That was not the correct entry. So look for a different entry. Yeah. So then you look for a different pattern that can favor you to get into the market. Again, another scenario that I'm sure it happens. It's, for instance, let's say you expected the price to come here and drop, but maybe to some instance, you just moved away from the chart for just a few minutes. On returning back, you find that the market has shifted up, let's say here. You want to just sell here? No, don't. Don't chase the market. The market will always give you a second chance. It's either you miss or you wait for the second chance, but never make a mistake of following or chasing the market, because what usually happens, since the market does not does not move just on a straight or uh, direct moves like in a straight line, let me use that. It travels in ranges, and after every impulse, there needs to be a correction before the next impulse. So wait for a correction before you join the trend. That's the best advice I can ever give you. Don't ever chase the market. If you're being left behind, there is always a second chance to take the trade. That's I'm basing that according to the theory that the price does not move straight. You see here, these corrections are possible entry zones if you missed when the price was dropping. Yeah. For example, you had a break of structure here. So you expected the price to come back to this breaker here so that you sell here. On coming back to the market, you find the price, let's say it's already here. So you don't sell here that, I was supposed to sell here, but the market is here. But since we're in downtrend, let me just sell here. You see what will happen? You'll be in blue in a short while, then back to red, and maybe you give up and do what? Close the trade. Then boom, the market drops. Oh shit, it shifted again. Maybe this time it won't come back. So you sell again around here. Then you see red. So You will keep on scalping the losses, scalping the losses. At the end of the day, you find yourself with nothing. No gain, but just losses. Your account is red. And that is the mistake most of us make, chasing the market. Anyway, that's enough for today. And okay, there is something I want to talk here, but it's okay. Maybe I will cover it in the next lesson. But for now, good luck and good trading.